It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, April the 25th, 2016. Another exciting newsletter in store for you guys and gals tonight. On the list tonight, we got crude, S&P, gold, and of course the euro. Before we jump into our charts and take a look at tomorrow's strategy, I do want to remind you guys the only place to watch the full-length version of this newsletter is here on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link in the description of this YouTube video. Follow that link and come join me on the trading blog at Sideways Markets. That way you can watch the entire full-length version of this nightly newsletter. While you're here, don't forget to grab a free pass. Come out and join me as a guest in the trade room, upper left-hand corner. In the lower left-hand corner, please remember to join our nightly newsletter mailing list. I need your name, your email address, and then check your inbox. I'm going to send you a verification email. Right below the video tonight, don't forget to download the charts so you have them ready for tomorrow. And of course, on the right-hand side, you can learn all about what it means to be a member here at School of Trade by registering as a trial member here at School of Trade. Don't forget to check your inbox, because when you register as a student here, as a trial member, we're going to make sure to verify we got the right email address. If you have any questions along the way, don't forget, we've always got someone standing by 24/7, 365 to give you guys a hand. Hope you had a great weekend. We got another big week in front of us here. Markets are getting set up for what do we got here? FOMC on Wednesday. Boy, it's going to be another busy week with FOMC. We got some inventories. We got some GDP. Another big week here as we finish up this very active month of April. First of all, check the calendar for tomorrow. Tomorrow is the beginning of the FOMC meeting. 8 times a year, the Federal Open Market Committee. They'll meet for 2 days, and tomorrow is the beginning of that 2-day meeting. On Wednesday afternoon, boy, Wednesday is going to be a doozy. We're going to hear from the FOMC meeting announcement Wednesday afternoon. So not a big deal for tomorrow's session. We definitely saw a bit of laziness from the equity markets today. They might be putting their helmets on fast and tight for what they hear from the FOMC announcement. They're not expecting much of a different tone, right? Expecting to see some hawkish tone on Wednesday's announcement. But again, we'll talk more about that in tomorrow evening's newsletter. So the beginning of the 2-day meeting happens tomorrow. Shouldn't affect us too badly. We may see some light volume on the S&P, gold, and euro, but boy, crude's been pretty darn good this week so far, so no reason to expect anything else. But if we do see some light volume tomorrow, though, we will know ahead of FOMC, equities, gold, and euro obviously are going to be the ones most affected. And then, of course, we'll see how crude looks tomorrow morning as well. Major news tomorrow morning, 8:30 a.m. Durable goods, always a really big market mover. We'll be watching that market tomorrow morning, or that news tomorrow morning, live in real time in our trade room, which opens up at 8 o'clock Eastern time. That's the big news of tomorrow morning. Then we have 9 o'clock news and 10 o'clock news. So 8:30, 9 o'clock, and 10 o'clock. Don't forget, news is noise. We try to stay away from news as best we can. 5 minutes before, 5 minutes after. You get the schedule for tomorrow. Don't forget, you do not need to go out and do this on your own. Come out and join me tomorrow morning at 8 o'clock Eastern time in our trade room as an advanced member, and we'll do all of it along with you. But now you guys have the schedule for tomorrow. And then again, tomorrow night, we'll talk more about the plan for the FOMC on Wednesday. All right, going to be a busy day on Wednesday. We get inventories and the FOMC. Let's crack this thing open here tonight with we'll go crude, E-mini S&P, gold, and we'll wrap it up with the euro. We can't forget about the euro. Crude is bearish this evening, but we're trading into a measured move target, which means we likely only have one more leg down before the sellers take their profit and wait for a bullish correction higher tomorrow, possibly all the way back up to that pending bear channel high up around that 43.60, 43.70 area. Now, the short-term bear channel tells us the sellers will be trying to retest the lows at 42.58. The measured move has already been tested once, and we typically don't see freight trains like this stop and turn around. We're probably going to see at least 2 tests of that measured move before the sellers give up control. So we expect another run back to the lows before the sellers let this price out of their control tomorrow. For the buy side, they will be shooting for the highs of that pending bear channel as a target in the short term, and a possible run all the way back to 44.04, right? Back to the high of day today if the sellers can't hold off the bulls at the channel high after a correction. we only got really two real important technical clues on the chart here for tonight. In the upper right-hand corner, you'll notice here we got more information there. Bear channel, there are two of them, right? There are two bear channels. First of all, the most important bear channel is the one that's been the most active so far. Beautiful example of rotation. Low to high, right? High to low to high, high to low, and of course back to the high. Now, at the high of a bear channel, what do we expect? We expect sellers to enter the market. We expect buyers to take their profit. Either way you look at it, sellers should be getting involved, right? Or we should be seeing sellers enter the market here, whether it's sellers selling the highs or buyers, of course, taking their profit at the highs. At the high of a bear channel, we're looking for buyer failure. And remember how this whole sequence goes, guys, right? Failure into strength, strength into pullbacks, pullbacks, of course, back down to retest that low. So as we go back to the high of this channel, we expect to see buyers try. Again, if they fail, sellers will look for attack, right? Failure into strength, strength into pullbacks, and pullbacks back down. Again, we do expect to see a double test of that measured move. We also may see those bears have to wait until we get up to a trap high, right? Trap high, buyer failure, strength, pullbacks, and right back down. So it's always a little bit difficult to tell where we're going to get that next selling opportunity, but we definitely know to start looking for those selling opportunities at the high of that bear channel. Next up, we have the measured move. The measured move, in all reality, if you're looking at this going, what? Why isn't there more than that? You definitely could. You could definitely say this is like a quadruple measured move down. Bottom line is, whether you're looking at this as 4 little minor legs down, or I kind of looked at this as being that was a pretty significant correction there, and so I drew it up. Very discretionary, very discretionary. This is just one of the benefits of being around the markets for a long time. You begin to kind of pick up on where things should be. I know you don't want to hear that as a new trader, but you've got that to look forward to when you survive the first 6 months of your career. Just put together the newbie trading plan for all my students in the advanced course. If you're an advanced course member, make sure to log into your advanced course at School of Trade and check out the brand new newbie trading plan, because I talk about how to survive the first 6 months of your trading career. It's much like any other business. If you can get through those first most businesses, 5 years, I believe you can survive the first 6 months in day trading, you'll be just fine, because you'll learn enough. The benefit about being a trader is, like every other liquid, asset, is that you can buy and sell, and you get instant feedback. The problem with most brick and mortar businesses, you don't find out that you're screwed until a few years later, right? Take real estate, for example. Not a lot of businesses that can give you instant feedback and allow you to learn from that feedback like the financial markets do. That's why I say, give me 6 months, and I think you're going to see the good, the bad, the ugly. We'll do a little bit of technical and a whole lot of mental work with us, right? Keeping our emotion under control. Bottom line is, we'll talk more about that in our course materials, and I'll see you guys as students in our trade room tomorrow morning. We'll do it together. Bottom line right now, measured move down. We know we have that measured move lower, and this is when I remind myself and I remind all of our students, markets don't tend to typically reverse just because it's an area of support. Wouldn't that be easy, right? Wouldn't it be so easy if we just bought support and just bounced off support every time? I know. It wouldn't be very good, because there wouldn't be any money left to make in this industry anymore, because everybody would be printing money. There wouldn't be any money left to print. So the bottom line is, it's not as easy as just buying support, right? We expect to see that market inertia continue back down, and then we'll look for that, what we call a measured move reversal, where we see that double bottom, higher high, and then we get the reversal. Okay, so we know we got really two big clues here. Last thing is this bear channel. This is what we call a pending bear channel. Looks pretty good, but as you can see though, we only have 1, 2, 3 data points to this channel. What's missing? How do you define a channel? How do you know there's a real channel there? You got to have 4, right? You got to really have 4 data points, right? So now going back to the high, if we can hold that high, that creates the real solid channel that we're looking for here. Most important thing right now is that's going to be an area of resistance. That'll definitely be an area of significant resistance. Now the buyers can use it as a target, and of course the sellers will use it for failure, strength, strength into pullbacks, right? Pullbacks right back down. Now you know the main pieces to it. Short-term bear channel says, look for traps to sell it back down. Measured move says, expect a double bottom to this, right? Don't expect it to reverse just off this one test of the measured move. And of course, the final thing that bear channel tells us, right, look for resistance overhead here. That could be, right, the high of a long-term bear channel, or it might just be an area for a breakout pullback, right, for the buyers to take this price higher. Speaking of which, let's talk about what the bears want to see. The bears want to see buyer failure above the swing high, right? So there's a swing high right there. Here's a swing high right here. We don't know which one's going to work or which one's going to give us the failure. What we know, though, is we're looking for failure, buyer failure into strength, strength into pullbacks, and then pullbacks right back down. Same thing up here, right? Buyer failure into strength, strength into pullbacks. We'll talk about the buyers in a second here, but that's what the sellers are looking for right now. What else you got for me here, sellers? Buyer failure at channel high. I'm referring to this big old channel high up here, right? We go up. Again, I have no way of telling how high this thing will correct before it finishes the move back down. It might just be a little short-term trap high. It might be back to this 43.32. It might be all the way up to 43.56. It might all the way up to that top of that channel. Very difficult for me to tell how far it's going to go. But again, if I'm a seller, I'm looking for failure here. I'm looking for failure here. I'm looking for failure here. Relatively simple, right? Relatively simple. The key is you've got to know what constitutes a failure and how to properly get into it. We teach all of that stuff to all of our advanced members, right? Entry triggers and all of the setups that we use for this stuff. Bulls, what are you guys looking for, right? If you're a bull out there right now, here's what you want. First of all, higher high. Hold a pullback. Right now it's a bearish market. What's the best way to buy a bearish market? What do you think? Wait till it becomes a bullish market. Of course. What else could you want? That's as simple as it goes, right? So higher high, hold a pullback. Now it becomes a bull market. Simple as that. Okay, so that's what the bulls want to see. Higher high, hold a pullback. Now, just be careful because you got resistance overhead, right? So just make sure you don't buy into that resistance. And I'm definitely talking about the high, right, of that channel. That's going to be the big one. That's where a lot of sellers are going to be coming in, trying to take the money from those buyers. Next up, breakout pullback at channel high. Here's my channel high. Now, what's the best way to trade resistance? Turn it into support, right? We talk about this all the time. What's the best way to buy a resistance? Don't buy a resistance, buy it support. It's so simple when you say it that way. Well, it's not that simple. You got to know what to look for. Wait for price to go up, right? Get into this resistance, break out, pull back, and now that resistance turns into support, and we're gunning for that high. That's going to be the tricky one. That'll be a little bit tricky because you're going to have sellers that are going to want to sell this thing right back down again, all right? You're really going to have to battle and watch your entries there. We'll obviously be doing this live in real time tomorrow morning with all of our students, right? So breakout, pullback above channel high. What else? We got one more here. This is the most aggressive for the bulls. A double bottom reversal at a measured move. There's your measured move, 42.69. We got one bottom, double bottom. That also, by the way, puts us back at support at the low of this channel. And then, of course, higher high, hold the pullback, and go. Most important thing is, if we do get that double bottom, again, don't forget the sequence. Failure, seller failure into strength, strength into pullbacks, pullbacks on the way up. The one thing you got to watch out for is going to be that falling resistance trend line. Again, it's resistance until it becomes support. Got a pretty good plan, though, for you on the crude. Okay? Don't forget, anytime we talk about a measured move reversal or a channel overshoot reversal, don't forget, make sure to use the 1 to 2 risk to reward ratio. That means 30 tick stop, 60 tick target, okay, because you're only going to be able to get about a 50% win on that reversal. If you try to buy in a bearish market, you lose all reliability. If you look for a double overshoot of that low or a double bottom reversal at the measured move, you're buying into a bearish market, and therefore you have to adopt a much more strict risk-reward ratio than this because you're not going to get lucky bounces.